What if emerging economies, particularly China and its BRICS allies, decided to rewrite the rules of global finance? What if they directly challenged the US dollar's long-standing dominance? This isn't a distant hypothetical scenario. It's happening right now. Under the leadership of Xi Jinping, China is spearheading a global financial shift. Through bold currency agreements and diplomatic strategies, they are crafting a new economic framework that is reshaping how countries conduct business. At the center of this shift is the Chinese yuan. Could this mark the beginning of the end for the US dollar as the world's reserve currency? At the heart of China's strategy are currency swap agreements. But what are these agreements, and why is China so determined to promote them? In simple terms, a currency swap is an arrangement between two countries to directly exchange their currencies, eliminating the need for the US dollar as an intermediary. This allows trade to occur more efficiently and at a lower cost. For China, this is about more than just financial convenience. It's a calculated move in its broader global strategy. Imagine two neighboring countries trading goods. Instead of using a third-party currency to facilitate the transaction, they trade directly, like swapping apples for oranges. China is implementing this concept on a global scale. In recent years, China has signed over 40 currency swap agreements with other nations, enabling them to trade using their own currencies instead of the US dollar. These deals, worth over $4 trillion, are shaping the economic future of many countries, particularly those in emerging markets, by aligning them more closely with China's economic model. Why is China so intent on reducing its reliance on the US dollar? The answer lies in the risks associated with overdependence on the dollar. For decades, the US dollar has been the dominant currency for international trade, with the global financial system built around American rules. However, this dominance exposes countries to vulnerabilities such as exchange rate fluctuations, the threat of US sanctions, and financial instability. By promoting the yuan, China offers an alternative, helping countries build more stable and independent financial systems. China's currency swaps are about more than just money. They are also about fostering trust. Countries like Thailand and South Korea have signed these agreements, strengthening their trade ties with China. This sends a clear message to the world, especially to BRICS nations, that the US dollar's dominance may not last forever. China is using these swaps to challenge the dollar's supremacy. For years, the US dollar has been the primary currency for global trade, dominating international transactions and central bank reserves. Now, China is positioning the yuan as a strong alternative, particularly for developing economies. A recent example is China's growing partnership with Pakistan. The two countries have agreed to conduct most of their trade in yuan instead of the US dollar. This move shields them from risks associated with dollar-based trade, such as price volatility and sanctions. Through these efforts, China is reshaping the global financial landscape, signaling that the era of US dollar dominance may be approaching its end. China's currency swap agreements also allow countries to continue trading freely without facing pressure from Western nations. China's influence is expanding beyond Asia and into South America. For instance, Argentina has begun using the yuan to settle its trade with China, helping the country avoid the instability of the dollar and providing a more stable currency for its economy. This demonstrates how the yuan is becoming an appealing option for nations seeking greater stability in an uncertain global economy. As more countries sign currency swap agreements with China, the yuan is gaining traction as a global currency. In regions like Africa, Asia, and Latin America, the yuan is emerging as a symbol of a new economic order, one where the US dollar is no longer the sole dominant currency. Each new currency swap agreement further solidifies China's growing influence in the global economy. What does this mean for the future of global finance? It could signal the beginning of a significant shift. As more nations adopt the yuan and other currencies in place of the US dollar, the dollar's dominance is being challenged. China is at the center of this transformation, leveraging its growing economic power to reshape the global financial system. This shift marks a move away from traditional Western-led institutions toward a more balanced world order. Emerging markets are finding new ways to engage with the global economy without relying on the dollar. Could this be the start of a new financial era where the US dollar is no longer the top global currency? While it's difficult to predict with certainty, the rise of China and the increasing use of the yuan suggest that the world may be heading toward a more diverse financial system. This shift carries significant implications. Countries worldwide are already adjusting their financial strategies, and businesses must follow suit. For nations embracing the yuan and other alternatives, the future could bring greater stability and economic freedom. For the U.S., however, this shift could diminish its ability to control global markets and reduce its political influence. One thing is clear: the global financial system is evolving, and the U.S. dollar's position at the top may not be as secure as it once was. China's economic strategy is driving this transition, and the yuan is poised to play a central role in creating a more balanced global economy. In Africa, several countries are beginning to adopt the yuan. Nations like Nigeria and South Africa, both key BRICS members, are increasingly using the yuan in trade and business. This shift is about more than money. It reflects broader changes in global politics. China is becoming a stronger economic partner for countries across the world, particularly in Africa. Take Nigeria, for example. As one of Africa's largest economies, Nigeria now allows businesses to trade directly in yuan with China, bypassing the U.S. dollar. This approach reduces exchange fees and shields the country from the dollar's volatility. South Africa is also using the yuan more frequently in trade agreements, which helps reduce its dependence on the dollar while strengthening its economic ties with China. These shifts highlight African nations' efforts to stabilize their economies and minimize reliance on the dollar. This trend extends beyond Africa. BRICS nations have even discussed creating a new shared currency to further challenge the dollar's dominance in global trade. Such a move would represent a major step in China's broader strategy to reshape the financial system and diminish U.S. control over global finance. This transformation is gaining momentum, with experts noting that the move away from the dollar is accelerating. However, the real test will come during times of financial crisis. In such moments, China's currency swap agreements could prove vital. For example, during Sri Lanka's recent financial crisis, the country relied on a currency swap agreement with China to prevent running out of funds. This allowed Sri Lanka to continue purchasing essential goods without depleting its dollar reserves. More countries are turning to these agreements as a safeguard for their economies. For China, offering these swaps demonstrates its growing role as a trusted financial partner on the global stage. However, a key question remains: can the yuan truly become the world's top global currency? It is still too early to predict the full extent of the yuan's impact, but China's efforts are undeniably reshaping the global financial landscape. The yuan is no longer confined to Chinese trade. It has evolved into a strategic tool for China's broader global ambitions, directly challenging the dominance of the U.S. dollar. Each new agreement China signs strengthens the yuan's role in global trade and reduces reliance on the dollar. This is a key step in China's long-term goal to establish a financial system where the U.S. dollar no longer holds absolute power. In Africa, the growing influence of the yuan is increasingly evident. Major economies like Nigeria and South Africa are incorporating the yuan into their trade with China as part of a larger effort to strengthen economic ties and reduce their dependence on the U.S. dollar. By settling transactions in yuan, these countries are signaling their desire for greater financial independence and stability, which provides them with more flexibility to navigate the challenges of the global economy. This trend is not limited to a handful of nations. From Kenya to Egypt, more African countries are adopting the yuan in their economic dealings. China's Belt and Road Initiative, designed to improve infrastructure and trade links between China and Africa, plays a crucial role in accelerating the yuan's adoption. With an increasing number of Chinese businesses and financial institutions expanding into Africa, the yuan is quickly becoming the currency of choice for many local transactions, further solidifying China's economic influence on the continent. Looking to the future, the question is not whether the yuan will continue to rise in importance, but how soon it will directly challenge the U.S. dollar's dominance. Although the dollar remains the world's primary reserve currency for now, the growing use of the yuan in global trade signals a gradual transformation in the international financial landscape. As more countries follow China's lead, the yuan could play a much larger role in shaping the global economy. South Africa, a key BRICS partner, has already made significant moves by integrating the yuan into its foreign reserves. This marks a major shift from traditional reliance on the U.S. dollar, signaling a broader global trend of countries placing trust in China's trade agreements and financial systems. Even developed economies like Japan are beginning to take notice. Japan has signed direct currency swap agreements with China, allowing trade between the yen and the yuan without involving the US dollar. These agreements represent a significant milestone, demonstrating the yuan's growing influence not only in developing economies, but also across the global financial system. The rising prominence of the yuan is also central to discussions within the BRICS nations, Brazil, Russia, India, China, and South Africa, about creating a shared currency. As the economic weight of the BRICS bloc continues to grow, representing a substantial portion of global GDP, China's success in promoting the yuan strengthens the foundation for a new regional currency model. This model could challenge the dollar's dominance and reshape the global financial system. If the yuan continues to gain prominence, it may even lay the groundwork for a new global reserve currency. However, this shift is about more than just economic influence. It is a component of China's broader strategy to diminish the US dollar's control over international trade. By positioning the yuan as a central currency, China is establishing itself not only as an economic powerhouse, but also as a leading player in shaping the future of global finance. A stronger yuan represents more than improved trade dynamics. It symbolizes China's growing influence on the global stage. This aligns with China's broader vision of becoming a dominant force in global finance, with the power to shape the rules of the international financial system. What if emerging economies, particularly China and its BRICS allies, decided to rewrite the rules of global finance? What if they directly challenged the US dollar's long-standing dominance? This is not a hypothetical scenario. It's happening right now. Under the leadership of Xi Jinping, China is spearheading a global financial shift. Using bold currency agreements and strategic diplomacy, China is creating a new economic framework that is changing how countries conduct business, with the Chinese yuan at the center of this transformation. China's strategy revolves around currency swap agreements. But what are they, and why is China so focused on them? In simple terms, a currency swap allows two countries to exchange their currencies directly, bypassing the US dollar. This makes trade more efficient and cost-effective between nations. For China, however, this is more than a matter of financial convenience. It's a calculated move within a broader global strategy. Imagine two neighboring countries trading goods without needing a third-party currency. Instead of using the dollar, they exchange goods directly, like swapping apples for oranges. China is applying this concept on a global scale. Over the past few years, China has signed more than 40 currency swap agreements, worth over $4 trillion, with countries around the world. These agreements are particularly transformative for emerging markets, drawing them closer to China's economic model. But why does China want to reduce its reliance on the US dollar? For decades, the dollar has been the cornerstone of international trade and finance, making countries vulnerable to fluctuations in exchange rates, sanctions, and financial instability. By promoting the yuan, China offers an alternative, a more stable and independent financial system. Currency swaps are not just about money, they are about building trust. Countries like Thailand and South Korea have strengthened their trade relationships with China through such deals, sending a clear signal: the US dollar may not always dominate. In Pakistan, for example, China has established a framework for conducting most trade in yuan instead of the dollar. This helps both countries avoid risks tied to dollar-based trade, such as price volatility and sanctions. Similarly, Argentina has begun settling its trade with China in yuan, providing economic stability in an otherwise volatile global market. Across Africa, Asia, and Latin America, the yuan is increasingly seen as a symbol of a new economic order, one where the US dollar is no longer the sole player. As more countries adopt the yuan, global finance is shifting. China's strategy of promoting the yuan challenges the dollar's dominance and redistributes power from traditional Western institutions to a more balanced global framework. Emerging markets now have new ways to engage in international trade without relying on the dollar. China's influence is particularly evident in Africa, where countries like Nigeria and South Africa have integrated the yuan into their trade systems. These moves reduce dependency on the dollar and enhance economic ties with China. Through initiatives like the Belt and Road Project, China is solidifying the yuan's role as a currency of choice for local transactions, further expanding its influence. Even developed economies are taking note. Japan has signed direct currency swap agreements with China, enabling trade between the yen and the yuan without involving the dollar. Such agreements highlight the yuan's growing role not just in emerging markets, but also within the global financial system. Within the BRICS bloc, discussions about creating a shared currency further underscore the potential of China's strategy to reshape global finance. While the US dollar remains the world's primary reserve currency, the increasing use of the yuan signals a gradual transformation. If the yuan continues to rise, it could pave the way for a multi-currency world, a financial system less reliant on a single dominant currency. This shift has profound geopolitical implications, as economic diplomacy and currency agreements become central to global trade. However, challenges remain. The yuan's capital mobility is limited, and it is not as easily convertible as the dollar. Yet, China has shown resilience in addressing such issues through its strategic initiatives and growing network of currency swaps. Under Xi Jinping's leadership, China is not just participating in global finance, it is changing the rules. The rise of the yuan represents more than just economic growth. It signifies a geopolitical shift. With over 40 countries already engaged in currency agreements with China, the path forward is clear, though the outcome remains uncertain. Could the yuan replace the dollar as the dominant global currency in the coming decades? Only time will tell.